Using standard Japanese candlesticks can be overwhelming and complicated for novice traders. Often they're complex, they can be controversial, and they are harder to read. Also, in most cases, different individuals will read them in a different way. In this situation, Heikin Ashi candles can make the difference, offering their simplicity. They filter most of the noise, and as a result we have clearer charts. In simple words, they make trends, consolidations and reversals detection way more easier, especially for the untrained eye. That's the reason why Heikin Ashi candles can be more suitable for the beginner traders who are still struggling to read standard Japanese candles. As I said, Heikin Ashi candles are providing clear sentiment and they are easier to read. Candle body with no wicks from one of the sides means strong buy or sell sentiment depending on direction, and candle with big wicks means weaker sentiment and can represent momentum or full reversal of the direction. Small body candles or dojis show indecision, and for the traders they mean wait to see what will happen. Sequence of green candles mean bull trend, and sequence of red candles means bear trend. If the uptrend contains big candles with no wicks from the bottom side, it means that it's a strong uptrend. If the downtrend contains big body candles with no wicks from the upper side, it means that it's a strong bear trend. And usually trends get weaker once the bodies of the candles get smaller. Consolidation means usually small candles with shadows from the both sides. And reversals usually happen after consolidation and change in the color of the candles. 2-3 candles in one color after consolidation with no wicks from one of the sides, of course depending on the direction, usually means momentum, and if the size of the candles does increase, it may be even a full reversal of the direction. So that should raise your attention. Aligning 2-3 time frames do represent stronger trend and can help you to remain in the trend for longer period of time. If you have monthly, weekly and daily all being in an uptrend, obviously having bullish sentiment will be a better idea. The most simple strategy here will be to align 2-3 small time frames, for example 5 minute, 3 minute and 1 minute, and once a modified candle becomes in one color across all 3 time frames, well, that's your entry. However, that may be the simple way, but that's not the best strategy using Heikin Ashi. That's why I'll add 2 more indicators to the chart and show you way more precise and solid trading strategy. Welcome to Simple Strategies channel, subscribe and let's dive into the video. Okay, how to apply our strategy on the chart. First, go ahead and change your candles to Heikin Ashi. Then go to indicators and add Ichimoku cloud. That will be the default Ichimoku cloud which every trading platform out there offers as a default indicator. Go to inputs and remove everything besides the Kumo cloud. Of course you can also change the colors, but I'll keep the default colors, and as inputs keep all the default settings. The Kumo cloud is a great trend detector. Once the price is above the cloud, it means that we are in uptrend, and vice versa. Once the price is under the cloud, it means that we are in a downtrend. Another tip here, if the cloud is thick, it means that the trend is strong, and if the cloud is thin, it's weak or the trend is getting weaker. Now go back to the indicators tab and add the money flow index, which we all know as MFI. Again, a default indicator, every trading platform out there offers it, and it's one of my favorite oscillators because it measures price and volume to measure the money flow in and out of an asset. In terms of settings, keep the default settings. In terms of style, you can customize the style, of course. Once you're ready, press OK and you are ready with the strategy. Everything is on the chart. Now your question is how actually we can use that strategy in our advantage. Align 2 or 3 time frame charts together with the Kumo cloud, all being in the same direction. Wait for 2 or 3 Heikin Ashi candles with no or small wicks from one of the sides depending on the direction, and that can be your entry. Stop loss can be under a support or resistance or under or above the cloud depending on the direction, and you exit once you see 2 or 3 candles in the opposite direction. However, if you want to chase very highly accurate setups only, you include also the MFI. For a trigger, you can use the 50% cross as an entry. Okay, so how to manage that position? The simple way is to enter and wait for the trend to change direction using the Heikin Ashi rules which we talked about. Stop loss under the support or resistance or under the cloud. Or for even more precision, you can use the MFI to identify the golden zone. You have a line to 3 charts in one direction, you have your Kumo cloud matching that direction, you wait for the 50% cross on the MFI, you wait for 2-3 consecutive candles on the Heikin Ashi, you enter into the market, but this time to manage the position you're going to be using the MFI. You start to observe the MFI line, and once that MFI line enter above the 80%, you take out 70-80% of the position as a partial. And then, since you don't know if the trend is over, you can leave the 20-30% live in the position until you get a trend reversal, or you can start to trail your stop loss under the previous low and just wait for the market to get you out. The section from the 50% up to the 80%, this is the place where you want to guarantee your trade and get paid, because this is the portion of the chart where you have the highest probability rate. In this case, as you can see, we can ride that trend for quite some time. Now let me show you 2-3 more examples and we'll wrap up the video. As you can see, this last trade is quite massive with almost 1:15 risk reward ratio, and yes, occasionally you will be able to catch those trades, so there is a lot of potential behind this strategy. I hope you like it. If you have any questions or you want to share your experience, make sure to post a comment under the video, subscribe, and I'll see you all with the next one.